Good afternoon, good morning, and good evening, traders. I trust and hope that you're all doing well. Today, we're going to be jumping straight into this week's market prep video, and we're going to be cutting through all of the noise. We're going to also be zooming in on some of the real drivers that's currently shaping the markets. For example, the fundamental data, central bank moves, and also the macroeconomic shifts, all those things that actually matters. So whether you're trading the dollar, uh, whether you're tracking the euro or you're watching gold for the next big move, in this breakdown, I'm going to do all I can to give you that edge you need to start the coming week with confidence and clarity. And obviously, in saying that, we're going to be unpacking the key events behind the dollar's most recent strength. And also the euro's unexpected resilience. And also why gold is currently struggling to hold above 3300. So if you are serious about trading, if you're serious about kind of leveraging the information that is available to you for this week, then I would encourage you to stick around, and we'll dive straight in. So, with all that being said, guys, starting off with the dollar, we can see that we still have price hovering at the bottom of the quarterly ascending channel upon this third touch over here. And the dollar has since gained a bit of momentum, at least in the short term. And so, for those of you that watched last week's video, we have made mention of certain key levels that the dollar was typically targeting, and it has since reached those levels. But now, what we're actually looking for is a definitive break, in fact, of a particular resistance level, i.e., the level around 98.30. Now, we have seen in the daily time frame that we've broken the 98.30 level, but what we are actually looking for is a definitive break of this level, but also a break and close above the 50 period moving average. Now, the question that we kind of faced with at the moment is, do we have the capacity? Does the dollar have the capacity to actually see this through? So, one of the key fundamental points that I'd like to kind of address is the fact that the US economic data shows a lot of resilience, particularly the recent US GDP growth surprised to the upside, reinforcing the idea that the US economy is still expanding at a healthy pace despite tight monetary policies. Then we also have the unemployment rate, which remains below 4%, and consumer confidence did tick higher, signaling continued domestic demand strength. So, with all that being said, we still have sticky inflation that does keep the Fed in play. Also, with the core PCE inflation data, the Fed preferred, which is the Fed's preferred metric, this does remain above the target, which does support higher rates for longer. So the market is not necessarily pricing in aggressive cuts for 2025, which does limit the DXY downside. So if we jump over to our Fed Watch tool over here, we can see that for July at least, we have a 97.4% chance of a rate cut. Now, if we jump over to September, that has the number that we see over here is steadily increasing, with last week being around, I think, 53 or 56%. This week, however, we see that it has gone up to 62.4% chance of a 25 basis point rate cut that is on the horizon in and of itself. And then also, if we just go to this week's calendar, we do have the non-farm payroll that's coming out, which is going to be a huge driver. We have JOLTS openings as well. And then we also have the core PCE, like we said, which is the Fed's preferred metric, and then jobless claims as well. So this is going to be a very, very interesting and pivotal week for the dollar. And so, one of the things that we're looking for, like I mentioned, if we see a potential opportunity for the dollar to get stronger, it's going to be based on the data that's already been released, but at the same time, it's going to be heavily influenced by the data that is still to come. So, just coming back, to the Fed, where there was signals that um, kind of incited no panic. In other words, the Fed is encouraging investors, traders, all of market participants to not panic. The Fed's official Fed officials have maintained that while inflation is currently falling, it's not yet at levels that justifies easing. Okay, even though we see that the president is pushing Fed Chair Jerome Powell to start cutting rates, they don't necessarily feel that this is necessarily the right time. And so we also have the geopolitical risks that still sees the dollar as a safe haven. So outgoing tensions now in Taiwan, straight from the unrest from the Middle East. This does contribute to occasional dollar strength due to it being a safe haven currency. And so also the dollar faces structural weaknesses in the long term. And this is something that we've touched on for quite a bit of time now. Those of you that are always watching my videos on TradingView, you will have noticed that my overall bias for the dollar is ultimately to the downside. But in the short term, we do see that there's the potential to see a stronger dollar down the line. And so the weaker dollar is supported by fiscal deficits and obviously global de-dollarization initiatives. So this is especially amongst the BRICS nations. And so these are all factors that we need to consider and be mindful of, especially when we're discussing the dollar and the long-term impact. So if I was to look at certain particular levels that I need to see get broken, like I said, at least on the daily time frame, I need to see the 50 period moving average get broken with definitive confirmation. So my first prize would be to see a close above 98.30 and a solid close above the 50 period moving average. And then just scaling over now, if we go into the intraday time frames, now this is something that I don't necessarily enjoy doing on the intraday, and that is to kind of study the markets for certain key levels on an intraday time frame, because these levels are much likely to get broken. But what we are saying is that what it shows us is that there's a lot of work that the dollar has to do in order to prove that it has the capacity to actually break these core levels of resistance, which will then see the dollar building momentum to the upside. Now, as it stands, like I said, my bias for the dollar in the short term is to see it build some momentum further up, especially considering that if this is going to be the considered low, bearing in mind that this will be then the first higher low of a potential short-term trend reversal, at least on the daily time frame. So what I'm looking for, like I said, is a break of 98.30 as well as a break of the 50 period moving average on the daily time frame. Obviously, a break below this area over here, this price over here, 97.10, and testing 96.65. If we break below these areas, then we are clearly moving uh, downwards. But as it stands, we do have certain data that supports a stronger dollar, and it's weighted to see the dollar strengthen in the short term instead of it seeing weaken in the short term. And so these are things that we're still waiting to play out, particularly coming with this week's um, economic data releases, which is also going to be a pivotal uh, and it's also going to be instrumental in giving us more insight into how the dollar is going to be unfolding in the coming weeks. So, with that being said, guys, let's jump over to our next instrument. So, jumping now over to the euro, one of the things that we can see from a technical perspective is that for those of you that watched last week's video, I was in a bit of a short. The price has since reversed completely, and now my bias changed immediately to a long. And I did do a little bit of a post on my LinkedIn page where I spoke about, as a trader, you need to be like water. You need to be able to move and pivot with emotions, because you cannot marry the outcome. You cannot marry the trade. You have to be able to change your bias at the drop of a dime. And so when I saw that we had a beautiful test of the key support area now here at 115.75, and we had a beautiful rejection thereof, and then started building momentum to the upside, basically turning back all the gains that I've made as the price was coming down. I saw that there was an opportunity to potentially get long, and so my bias now shifted from the euro, you know, coming all the way down to test. What is this? To come down and test 114.8, 114.90, and so there was still a bit of work to be done, but the market obviously turned well before that, and as a result of that, I saw this as an opportunity to actually get long. And so, as you guys can see, I am in a long position. The reason the markets aren't moving is because I'm recording this on a Sunday, but my bias now has shifted to the upside. And so, there's a few reasons why. There's a few reasons why I'm looking for the euro to start building momentum to the upside. And this is also because if we scale over into the quarterly time frame, one of the things that I saw in the long run is that the euro will typically get stronger based on this quarter that we've seen close over here, which was last quarter. Now, this quarter closed with such veracity, if I can call it that, is that we've broken above the key resistance area of 114.95. We've then at the same time also broken and closed above, well above, both the 100 period moving average and the 50 period moving average on the quarterly time frame. And so that short that I was doing, I was actually shorting it towards the upper part of the bands over here, but we didn't see price pull back that deeply. And so I do see that because the retracement is now kind of run its course, that's the way it looks. My buy is now shifted to the upside. And so I have a long-term view of the of the euro potentially seeing 122.50. I'd say 122.50, but 122.56 is the prior highs over here. I do see that there's a strong potential to see that the euro actually build up to this end over here. Now, obviously, there's not enough data from an economic standpoint to suggest that this is a definitive um, level that the market is going to reach. But in the short term, at least, we do have some strong reasons why we see the euro actually potentially building up closely towards this level. Starting off with the interest rates. ECB maintains interest rates at 2%. Okay, so the ECB held rates steady, citing that slowing the persistent inflation and weak eurozone growth. Christine Lagarde does acknowledge that inflation is still above 2%, but the economy is still fragile. However, in saying all of this, the euro is supported by trade optimism. So reports of a potential EU US trade agreement uh, with reduced tariffs has kind of allowed the euro to kind of build a little bit of momentum, signal which signals improving in transatlantic relations and also um, a better risk sentiment. So the divergence in growth outlook. So while the U.S. economy remains resilient, the eurozone in this instance is facing some stagnation, particularly in Germany and Italy, and euro strength may be limited if the region underperforms in the second half of the year. So, euro inflation is slowly cooling in the eurozone, and CPI readings does show disinflation continuing, especially in the core of goods and services. And this may also give the ECB cover to consider a rate cut later in the year, likely in December, but not September. This does contrast what we've seen in the dollar, where the dollar is likely to see a rate cut happening in September, and that might be the catalyst to see the euro start building momentum to the upside, because obviously a weaker dollar will result in a stronger euro. And so this could be the catalyst that we see push the euro further up. So positioning and sentiments are kind of mixed. So there's a net long speculative position on the euro at the moment, and this does remain elevating. This suggests that there is a lot of bullish momentum that's back in the euro, but this may be overstretched in the short term with increasing risk correction. So, what we're looking at is, like I mentioned, I'm looking at the euro to get stronger overall, but this is also linked to the bias that I have towards the dollar getting weaker in the long run. So in the short term, we could see the dollar kind of gradually make its way up and rebuild itself to the upside. But the one thing that I'm also cognizant of is that the dollar has already come and tested the 100 period moving average on the monthly time frame, the outside part of the bands, and all of the moving averages are now starting to point to the downside. So momentum is kind of supporting. So there's a lot of negative momentum kind of entering into the market, which suggests that there is now some. positive momentum coming in on the euro. And so, as we mentioned, that there's a lot of indecision on the dollar, and as a result of that, there's also a lot of indecision on the euro. But the weighting of the underlying sentiment towards the euro is bullish. And so I'm looking at everything that has been happening, and still seeing that the euro continues to build momentum to the upside despite all of the inflationary concerns, even the tariff concerns that's come out, and the euro continues to build momentum. And so this is the view that I take, that even in light of these negative data releases and economic concerns, the euro continues to build momentum. And so I'm looking at it from that perspective to see that if the euro can build momentum under those conditions, then it's likely that if positive data releases does come out for the euro, it's likely that we're going to see it start building momentum to the upside. So that's the stance that I take. Bearing in mind, this is the view that I take. This is the opinion. This is the opinion that I have. But you might share an opposite view, and that's absolutely fine. And if you do, I would encourage you to share your view in the comment section below. But for now, let's jump over to our third and final instrument. So finally, jumping over now to gold, we can see that gold has attempted yet again to break and close above 34.30, but was unsuccessful. Not sure. Shortly thereafter, testing that level, we saw that we had a very deep pullback over here. Now, there's a number of reasons why we see gold losing a lot of its momentum that we've seen in the past, one of the reasons is because of what we see happening with the dollar, and there's also been a lot of outflows from gold ETFs, and also selling pressure on spot gold. We also have the soft central bank demand. So the central bank are not necessarily purchasing gold as aggressively as they did. So after strong central bank buying in 2023, quarter one 2024, the recent data has started showing that there's been a unique slowdown in the net purchase of gold, especially from Turkey, China, and India. So inflation uncertainty still supports the long-term sentiment for gold to get stronger. But while inflation has typically cooled, many still see gold as a strategic hedge amidst the persistent macro uncertainty that we see in the markets. So the structural risks, for example, your US debts and the global conflict, um, this risk sentiment is typically improving, and and less demand for safe havens. So because we've seen that there is a sense of cooling in these areas, the demand for a safe haven is no longer there as it was when these events were amplified in the past. And so improved risk appetite occurs as a result, and due to trade optimism, and also the easing of geopolitical tensions, and all of these things has led us to see a slight shift away from safe haven assets like gold itself. So the question is, where do we see gold kind of going from here? So what I will typically do in this context is I want to kind of also take into consideration that there are certain levels that I'm removing because these levels are no longer relevant to where we see gold potentially headed. And so one of the things that I want to kind of just point out is that we have this beautiful upward sloping trend line that has been tested over here, and over here. A break of this trend line to the downside will see us kind of seeing gold kind of dip further. My first level that I'm looking at gold hitting upon a break of the upward sloping trend line will be over here around 23.45. Okay, sorry, 32.45, and then this will line up quite nicely with our 100 period moving average, which is going to obviously adjust every day. So tomorrow we could see when market opens that we are closer to 23.45, and once gold kind of gets towards this area over here, we then have to relook at the overall direction that we possibly see gold heading towards. A break of this level will then see us targeting the next logical area of support will be which will be 31.20. Now, as it stands, the question is, can gold possibly drop that low? So, if we're looking at how the macro environment is beginning to shape up, um, the tensions between countries are beginning to subside, but it has not been put to rest completely. And as a result of that, um, until such time, gold is still in the game. And so I'm looking at gold from the short term, where investors are likely to aggressively invest in assets that is going to yield them greater returns. Gold as a safe haven might not be on top of the list at the moment because there's no need to seek safe haven status at this present time. Because if we jump over to the S&P 500, we can see that it's hit and it's kind of making all-time highs in and of itself. And so this is a strong inverse indication as to what's happening with gold. When we see the stock market actually building momentum, actually breaking new highs, then it's likely that it's a very strong indication that investors are not looking to secure their investment and protect their investment. Instead, they are now aggressively putting it back into the market so that it can yield stronger returns. And so when we look at assets such as gold, we can see that when it's stagnating like this, when it's indecisive, when it's not necessarily building the momentum that we're familiar with, then it's likely that the economy is in the process where the risk sentiment is now switched on and investors are now ready to participate back into the markets and start earning um, returns on their investments. So, as it stands, with that being said, guys, unless something significant happens, unless we see another shift in global tensions, um, and an increase in uncertainty, gold is likely to kind of reduce in value and dip a little bit more. And so I'm going to be relooking, I'm kind of looking at gold and seeing how do we fare when we come close, or if we do break the upward sloping trend line, and upon that close, how do we approach 32.45 as a support? And there we're going to start monitoring what we could potentially surmise from the macroeconomic front, but also considering the fact that, again, if we jump over to our um, Fed Watch tool over here, how is this over here going to affect gold in and of itself? So these are all questions that we're faced with, and these are all things that we will be discussing during the course of the week um, and as we head into the new markets. But for the most part, guys, I really do hope that you found value in this week's video. I hope that it gave you some insight, and I hope that you were able to get some idea of how you're going to be positioning yourself for the week ahead. For the most part, I hope that you have an awesome day. Have a brilliant week, and I look forward to chatting to you all soon. Up until then, keep well, and bye for now.